Welcome back to the Wall Street Podcast. Today we're diving into a crucial new report, one that really makes you stop and think. It's from Goldman Sachs Global Investment Research.
That's right. Released July 25th this year. It's titled Quantifying the Risks of AI-Related Job Displacement.
And it tackles that big question: how will generative AI really affect the labor market? Authors Yen Hatzius, Joseph Briggs, Sarah Dong, and Megan Peters, they really get into the weeds here.
They do. It quantifies potential unemployment impacts under different AI adoption scenarios, different displacement levels. It's a detailed look.
So first off, what's AI actually doing right now in the labor market? Has it made a big dent?
Well, perhaps surprisingly, the report says the overall macro impact has been pretty small so far.
Just small. Why is that?
Mostly low adoption. They found only about, 9.3% of companies are really using it in production yet.
Ah, okay. So no big statistical link between AI exposure and overall job growth or unemployment rate.
Not at the aggregate level, no.
Oh,
But this is key. The micro picture is different.
different how?
We're seeing early signs of disruption in very specific areas. Think marketing, consulting, call centers, graphic design.
Search, software development too, right?
Exactly. Employment growth has actually turned negative in those fields. And the tech sector's overall employment share, it's dipped below its long-run trend since ChatGPT arrived in late 2022.
And it hits younger workers.
It seems so. Unemployment for tech workers aged 20-30 in those AI-exposed roles is up almost 3 percentage points since early 2025.
Suggests hiring headwinds for new grads then.
Definitely. And you hear it from corporate leaders too. Amazon, JP Morgan talking headcount reductions, Duolingo, Shopify.
Mentioning efficiency gains using AI instead of hiring more people.
Precisely. Which leads to the next big question, the future. Are we looking at massive permanent job losses, structural unemployment?
What does the report say?
It's actually quite skeptical about large permanent job losses over the next decade.
Based on history.
Largely, yes. History shows technological innovation tends to create new kinds of work that offset the losses. I mean, think about it. 60% of today's jobs didn't even exist in 1940.
That's a striking statistic.
And over 85% of long-run job growth comes from these new, often tech-driven roles. Plus, humans still have advantages in certain physical and cognitive tasks.
Okay, so not mass permanent unemployment. But there's a catch.
The bigger concern, the report argues, is a potential near-term rise in frictional unemployment.
Meaning the time it takes for displaced workers to find those new jobs.
Exactly. That transition period. Historically, a 1-point productivity boost from tech can temporarily raise unemployment by about 0.3 points for a couple of years.
And Goldman's forecast for generative AI?
Their baseline sees it boosting labor productivity maybe 15%. That could translate to maybe a half percentage point increase in the unemployment rate relative to trend during that transition.
Which corresponds to about 6–7% of workers being displaced.
That's their baseline projection, yes.
How do they even measure that risk across different jobs?
They built a pretty detailed model, bottom-up metrics for over 800 occupations, looking at 5 factors.
Right.
Things like consequence of error, is it high or low? Task repetitiveness, easily automated. Task cohesion, are tasks linked? Value of the AI-exposed tasks versus the whole wage.
And whether it's back office or front office work.
Right. Back office roles seem more emphasized for automation currently. So high-risk examples may be proofreaders, credit analysts, telemarketers.
Makes sense. Lower risk.
Think dermatologists, door-to-door salespeople, preschool teachers, roles needing complex interaction or high consequence of error.
So the overall economic outlook is meaningful impact, but probably manageable over 5–10 years.
That's the baseline view. Though they do flag that risks are skewed towards disruption, especially if AI adoption happens faster than expected. That could push the peak unemployment bump higher, maybe 0.7 to 1.8 percentage points.
Okay, this brings us to our first commentary point. Given history, where tech created jobs, what makes generative AI potentially different this time, according to the report?
Well, it's not so much if jobs will ultimately be replaced or created, but the speed and breadth. Generative AI can automate a wider range of knowledge tasks, potentially much faster than previous tech waves.
So the frictional unemployment period could be more pronounced?
That seems to be the core concern. A faster, maybe rockier transition as workers need to reallocate more quickly. It's about how long people are out of work during the shift.
Right. So for investors and strategists listening, what are the actionable insights here? Where should they anticipate shifts?
Well, The report directly points to those labor demand hits. We mentioned marketing, call centers, some tech functions. It suggests anticipating more adjustments, particularly in back office, operational roles, with repetitive or cohesive tasks.
Meaning businesses need to think about reskilling now.
Proactively, yes.
Hmm.
And for investors, it means watching labor cost efficiencies as a performance driver, especially in sectors highly exposed to AI automation potential.
Okay, third point, workforce resilience. Considering these occupational risks, what can individuals and, say, educational institutions do?
For individuals, the focus should be on skills, where humans maintain that edge, complex problem-solving, creativity, high-stakes decision-making, roles with lots of face-to-face, non-routine interaction.
Things AI struggles with.
Exactly. And for education, maybe less rote learning, more focus on critical thinking, adaptability, learning how to work alongside AI, preparing people for jobs that complement intelligent tools.
A continuous learning mindset, essentially.
Absolutely crucial, the report implies. This
Yes.
isn't a one-time shift.
So, to wrap up, this Goldman Sachs report paints a picture not of inevitable doom, but of a significant transition. The long term might be manageable, but that near term friction, that's the challenge.
Managing that friction, helping displaced workers reskill and find those new AI-driven opportunities quickly. The pace of adoption will be key.
It really underscores the need for vigilance and adaptation. So, as you think about this, maybe the question isn't just will my job exist, but how am I adapting? What skills are you building right now to navigate and even thrive in this AI augmented future? Something to consider as you plan your own path forward.